George Bairuthi from FS Securities, and about this morning I'm going to carry on with our CFD series. This is part 5. If you happen to have missed the first 4 parts, all you have to do is call us and we'll send you the presentations. Today I'm going to carry on and show you how, after we've increased the size of our capital from $500 to $3,500, and we've taken for the first time a CFD trade on a foreign exchange, that is the British pound versus the US. So first of all, let's talk about contract for difference. CFD stands for contract for difference, and we love it because it's a leverage trade. Leverage means it increases the profit if we were right. Remember, of course, if we were wrong, of course it amplifies the losses. But the most important part of this presentation is to tell you that when we started with $500, we knew that if we were to lose the full $500 very quickly, that wouldn't affect our lifestyle. And of course, it shouldn't either for you. So if you think losing $500 is going to affect your lifestyle, this is not for you. But it's very important to understand the risk and reward. And of course, we don't trade unless we have the ambition that we're going to make money out of it. So we do the study, we research whatever we do, and then we enter the trade knowing that there is a probability we're going to make money, but there is also a chance that we might lose it. So initially we opened the account with $500. That we call that a risk money. And I knew that if I was to lose the $500, it will not affect my lifestyle. So of course the intention is to make money, and because it's margin related, we understand that a very small amount of money you enter into a trade, and hopefully that will start to increase, and as your capital increases, then you may decide to take bigger trades. Right through, after we enter the trade, we've done some happen and pursues trades, and we were actually profitable in those trades. Our $500 turned into $1,500 in only a few weeks. Now, eventually I added an extra $3,000 into my account, and we've entered for the first time a CFD trade on foreign exchange. And we decided we take the British pound versus the US, knowing in the background fundamentally that the US were to actually drop the interest rate further, maybe this weekend, and we thought that with the drop in the interest rate, that is the cash rate between banks, and of course we also watching the yield curve, that is the difference between the 10-year yield versus the 2-year yield, and we're inversion, expecting that there could be a bit of pressure on the American economy, and therefore the interest rate drop will probably be a good high probability. That will obviously lower the value of the US and hopefully increase the value of the British pound. So we've entered that trade, and I'm going to show you where we are right now. Initially we made some losses, and I'm glad to say to you that we've closed this morning at around 10 o'clock, and we've made some decent profit. Okay, first of all, in part 4, that is the part before today, I showed you how we actually ended up the $3,500 became $3,996, 12% profit in just a few days. But remember now that we are a bigger trader and we have many options. The $500 initially, which on the 1st of August we had a capital of $1,500, as I explained to you, nearly 300% return on the $500, and we've added an extra $300, the first one on the 5th of August, second one on the 6th, and the third one on the 16th of August. And today, at this moment, we can see that our capital is sitting around the 4,800. All right, so this is where we are at the moment. We closed our British pound versus the US trade and we ended up with the profit. Remember, if you add the entry point of $179,000, you add those exit 181, so that ended up with nearly $2,000 profit. Okay, so the reason why we entered the trade and why we closed it. We entered the trade when we had some bullish signal, that were actually by looking at the indicators, and this morning we decided we close that position because even though it started to look a bit more bullish, we decided it was still too risky. We haven't seen a major momentum in the trade, and we've decided to take the profit when we can take it, and we ran with it. Now, of course, we are still likely to re-enter the trade if it drops below that level that we are at the moment. So we're watching it minute by minute, and this is actually the chart taken at 8:40 a.m. On the 21st, and today at this morning we can see at 10 past 10 this is the trade, and this is actually where we entered, and that's where we exit the trade. As you can see, the stochastic on the daily chart is very, very strong, and the parabolic stop and reverse very strong as well. But what we have in the back of our mind, that on the daily chart the 200-day moving average is above the 100, and the 100 is above the 50, and that is not a really good sign. But on the short term, we can see here that dotted orange line is the 9-day moving average, the black is the 21, and you can see here a major conversion. So we're going to watch the market, and we are still interested to re-enter the trade, the British pound versus the US. Okay, before I finish off, again, contract for difference is something that we love because it's leverage, and it consists of a buy and sell contract, and that's why we call it contract for difference. If your entry when you buy is lower than the exit when you sell, the difference between what you sell it at and what you bought it at is the difference, and that is the profit or loss. Of course, if you sell at a lower price than what you bought, then obviously it is a loss. With CFDs, you can always sell before you buy, and that of course can be a negative trade. That is a bearish trade. So here we go, and then you need to understand there is a risk in every single transaction of any nature in finance. You must understand there is no guarantee when you trade that you're going to make money. So at the moment, if you want to learn about trading CFDs, all you have to do is tell us that you want to learn, and we will teach you about all the factors behind CFD trading. The beautiful thing about CFD versus options is there is no time decay, and what you see on the trade, the price of the shares is reflected in the price of CFDs. Now, finally, our disclaimer. The disclaimer tells you that before you take any action, you need to consult with us. We don't know your professional, your financial circumstances, and therefore you need to actually understand the risk and reward. So again, I emphasize that there is no guarantee in trading, and therefore you've got to take some action when things don't go your way. If you got some questions, all you have to do is call us, and this is our mobile number. If you're ringing from overseas, 61 for the country code. You don't need the 0 if you ring from overseas. The number is 411-259526. I'm available nearly 14 hours a day from about 5 o'clock in the morning to whatever. If you're going to write an email to me, it's george@fssecurities.com.au. Finally, happy trading, and if you enjoy that particular presentation, we would love to hear from you with some feedback. Thank you and have a good day.